Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Will the IRS catch a missing 1099-C on your tax return? The short answer is yes, they almost certainly will, and it's important to understand how and why. When a creditor forgives or cancels a debt you owe of $600 or more, they are required by law to issue a Form 1099-C, which stands for cancellation of debt. This form is sent to both you and the IRS. For tax purposes, the IRS views that canceled debt as income. Think of it this way: if you owed $5,000 and the lender said you don't have to pay it back, it's as if they handed you a check for $5,000. That's why it needs to be reported on your tax return. The primary way the IRS catches this is through their automated matching system, often called the Automated Underreporter Program or AUR. This powerful computer system takes the 1099-C information reported by the lender and compares it against the income you reported on your Form 1040. If the computer sees that the lender reported $5,000 of canceled debt income for you, but it can't find that $5,000 on your return, it automatically flags your account. This process can take a year or even longer, but it is very effective. Once your account is flagged, you'll receive a notice in the mail, most likely a CP 2000 notice. This isn't a full-blown audit, but it's a letter from the IRS proposing changes to your tax return. It will state that you failed to report income and will calculate the additional tax you owe, plus penalties and interest. The penalties can be substantial, often an accuracy-related penalty of 20% of the underpaid tax, and the interest starts accruing from the original tax deadline and compounds daily. A common issue is people saying, "But I never received the 1099-C in the mail." Unfortunately, this is not a valid excuse for the IRS. The responsibility to report all income falls on you, the taxpayer. Even if the form got lost in the mail or sent to an old address, the lender still sent their copy to the IRS, and the matching system will still do its job. If you suspect a debt was canceled but didn't get a form, you should contact the lender or check your online IRS transcript for a copy. Now, here's the crucial part that many people miss: just because you receive a 1099-C doesn't automatically mean you owe tax on that amount. There are important exceptions. The most common is the insolvency exclusion. If, at the exact moment before your debt was canceled, your total liabilities, everything you owed, were greater than the fair market value of your total assets, everything you owned, you may be able to exclude some or all of that canceled debt from your income. To claim this, you must file Form 982, Reduction of Tax Attributes Due to Discharge of Indebtedness, with your tax return. Other exceptions include debts discharged in a Title 11 bankruptcy case. So, ignoring a 1099-C is a bad strategy that will likely lead to a bigger bill down the road with penalties and interest. The correct approach is to report it and then determine if you qualify for an exclusion to legally reduce or eliminate the tax. Thank you so much for watching. If you found this information helpful and want more clear